Back with closing trades right here in 80 now, and the closing trades are surely turning out a little bit rough. Over 300-point fall now. We're up to 17,900 level on the index, and the breath getting even more dismal as we approach closing on the last lap of today's trading session. A good 159 F&O names are standing to the declines, with just 22 odd standing to the advances as we speak right now, purely within the F&O segment. Dipan Mehta too on the show with us. Dipan, hi, afternoon. Was an excellent Dashera, not really turning out to be such a great pre-Diwali. How do you try and protect your profits and your portfolio, especially when it comes to some of the high beta mid-cap names now?
Yeah, good afternoon and thanks for having me on your show. I think I am slightly relieved that we are seeing this kind of a correction. There's a lot of fraud building up in the primary markets and the secondary market, and stock prices were just moving up, I would say, because of a lot of momentum buying which was taking place from retail investors, and such corrections are very healthy for the long.
Really apologize. Just stay with us. We have Utkarsh Chaturvedi, my colleague, who's starting with the Bajaj Auto Management. I'm going to quickly dip into that conversation first and come right back to you.
To now set the pace for the next level of transformation with these first two introductions. Progressively, we will of course bring the pulsar down the CC axis and address everything from 150 to the 250 cc, and sideways we have presented two options today, a naked option and a fade option, and there are a couple of other plays which we are considering. So over a period of time, we hope to completely change this portfolio and move it to a more modern portfolio.
Pulsar has been the market leader in the segment. It depends on how you define the segment, but in the 150 plus to 350 segment is the market leader. How do you see with the new Pulsar coming in, the new numbers, the new market share? What is the kind of impact you believe the new Pulsar will have, the new generation Pulsar will have on the market?
So these two models which have come, as you know, they are the 250cc models. So I don't expect from a volumetric point of view a very big impact immediately. In the least, we feel that they will the 220 franchise, the 220F franchise which we have, should definitely embrace it. It is at a very small price delta, as you know, but the product is highly refined, more contemporary, and it's got a lot of stuff in it. So we definitely see that happening. But the most important thing in this introduction is our attempt to make the 250cc, the quarter liter class, a mainstream class, to bring it into the everyday motorcycling. If you just compare like countries, Indonesia, Brazil, India, countries like that, you will see that the penetration of 250cc in the other countries with similar purchasing powers is far higher than in India. Now, we have been trying, there have been other brands, but we feel that the combination of a genuine 250 class performance with an accessible price should bring us closer to the sweet spot, if not at the sweet spot.
It's an interesting proposition, sir, because you're speaking about the 150 customers moving to 250, and are you targeting the 350 customer as well, which has been a bit away from you in a while? Dominar hasn't had the kind of success you expected. Do you think that the Pulsar 250 might really get those RE customers down the line of 250 as well?
The immediate catchment is of course the 220 customers, which I spoke about, and then of course people who are already in the sports cycling and know how to handle a big bike. However, there are a lot of customers out there who have got inertia of moving up because they simply have not got attracted to a proposition. Now there's a person who is riding a 125 or a 100 and sees a 150 and has just owned a bike for 3 years or so, is probably not gets too motivated with it. Our attempt and our experience also, for example, in the Dominar 250, when we do these surveys as to what was your previous ownership, we get astounding results. There are people who have come from scooters, there are people who come from 100cc popular brands, because these people have gone through the one cycle of ownership, so they're comfortable with a machine. And so, in the other sort of segment, I'm thinking is that we should attract some kind of upward mobility. In terms of downward mobility from the 350cc segment, I don't think so. People don't like to downtrade. However, sometimes what happens is that somebody wants a sporty style but wants a higher cc, and there is no buy option there. But I would put it as the smaller of the customer segments which will come to us.
Let's speak about this festive season, Galaxy. I'm quite intrigued of the fact that there are two very different stories playing out in the four-wheeler segment and two-wheeler segment. Four-wheeler segment, there's a lot of demand, there isn't the supply, the waiting periods are much high. But in the two-wheeler segment, that festive cheer is missing. Why is the difference?
So, it's going back to this whole thing that actually there are two Indias, or I would say there are three Indias, because there is one India which is very, very poor also. And we are seeing post-COVID and post the last round of economic growth that the fault lines between the two Indias have actually deepened. And in my opinion, we are seeing in the behavior of the two-wheeler demand a manifestation of this phenomena. That's why waiting list for cars, but huge stocks for entry-level companies. Even within motorcycles, there is the entry-level which is collapsing. The middle is doing well. The top, which is all ABS, and they've got a supply chain problem because of the chip shortage. Yeah. But really, even within the two-wheeler segment, it is the people who buy the lower priced bikes. Their purchasing power and confidence has got shaken.
Wanted to check with you, once this festive season ends, we are just right at the end of the Dhanteras is there. What kind of festive season do you expect for the whole two-wheeler segment, and how is things at Bajaj be?
So, I think with a few days left only, I would say that it would be nice if we can end like for like at an even number compared to last year. So the 35 odd days in festive, and if I compare with exactly the same 35 days Navratra, Dussehra, Dhanteras, Diwali period with this year's, we are trading right now. Hopefully there will be some kind of an uptick in the next few days. There is a month-end effect also, which is when a lot of dealers upload the retail information, particularly the secondary network. So with that, it should be even. But we would have liked, obviously, for it to have been higher.
School colleges opening, how big an impact will that have?
Very good. It's a very, very welcome move. Schools, colleges, shopping malls. A lot of IT companies are now saying. And
the headline really came in from Rajiv Bajaj, wherein he said that we're not as lightweight as the startups think we are. The biggest startup is Ola, but they are yet to sell a vehicle. We respect Ather a lot because we have, or rather they have sold vehicles already, saying, when asked who is it that you're going to bet on, he said, I would say bet on BET. That's Bajaj Auto, Eicher Motors, as well as TVS Motors, and saying that we are all champions, and you know what champions eat for breakfast? That's oats. So that's Ola, Ather, as well as Pune-based Torque. Dipan, quite an interesting play of words from Rajiv Bajaj speaking with the media just a short while back. Would you be willing to bet on the entire two-wheeler space and the incumbents, or the traditional favorites? That's your Bajaj, Hero, TVS, Eicher.
Well, I think the space is getting very crowded and it's getting very confusing. And Ola Electric certainly is a major risk factor for the entire two-wheeler industry because they are PE funded. So they can keep on making losses for many years, and that will bite into the profitability of the traditional two-wheeler manufacturers. So that's something which we have to take note of. And as and when they scale up their operations, the existing two-wheeler companies will face pressure. In any case, it's a highly competitive business. So if you still have to buy a stock in the two-wheeler, I would go with Eicher Motors, which is in a completely different leisure segment. and the threat from electric two-wheelers is not that much for Eicher as it is for Bajaj, TVS, Hero MotoCorp. So that's my assessment. But I'm not, too convinced about buying into any two-wheeler stock. It's just that I think Eicher will be slightly better placed. That's all.
Sure. Naresh, how are you stacking the auto charts right now? And does it seem like Tata Motors is clearly emerging as the strongest of the lot? I'm not going to restrict myself to two-wheelers here, the entire auto basket.
So in the auto basket, the only one which is showing strength clearly even in today's trade is TVS Motors. At the same time, the rest of the space has not seen a strong pullback. So they're just managing to hold on to the support. So whether it's a Hero MotoCorp, Bajaj Auto is very close to breaking down the supports today. So that looks like a weak one out here. Tata Motors again, because the rally has been so strong, one would either want it on dips or in fresh momentum above 530. So for now, the whole auto space is a bit confusing. Say Maruti on bad numbers has gone up but could not sustain. So overall, the view is wait and watch for the whole auto segment. I would rather go with momentum in Tata Motors whenever it crosses 520, 530. The rest of the pack, not really interested.
Right. Okay. What's seeing some traction today is IRCTC. That's of course the stock split. TVS Motors sure is holding up today. Lalpat Labs, IndusInd Bank, Metropolis are all spaces which are looking good. L&T, it's cooled off from the top, but after the numbers, still holding up by about 2%. But the one stock, of course, which saw some dhamaka numbers was United Spirits. Exceptional results coming in, sharp improvement in profitability. Of course, it remains to be seen whether or not the stock gives you another entry opportunity or not, considering from those 500, 540 odd levels, it's already risen up to 800, plus levels. But Dipan just wanted to understand, not just some of these liquor companies, but the entire broader theme of the reopen trade, your hotel names, aviation names, multiplexes, hospitality industry. Where within that would you find comfort to buy in the current decline?
I would go with retail. Companies like V-Mart, Trend, D-Mart. I think these companies, and Titan, of course, I think these companies have been underpinned a lot because of the pandemic. And now that we are seeing revenge buying taking place and more footfalls into their establishments, from a valuation perspective, from a long-term trend perspective, we're very positive on retail. Of course, aviation, multiplexes also should do well, but there was never really a correction in these stocks. And now that the opening up of the country has taken place, I think a lot of the gains have been priced into the aviation, the hotel companies, and to an extent the multiplexes. And there are some, I would say, longer-term negative trends post-pandemic, which may impact these businesses as well.
Right. In fact, on the subject of United Spirits, let's hear out from the management as to what they had to say after the dhamaka earnings that they posted for the second quarter in their conference call with investors as well as media personnel.
I touched upon this earlier. India has witnessed a 27% increase in the number of ultra HNI individuals between 2015 to 2020. A recent study by Knight Frank, covered by Fortune India's latest issue, estimates a 63% growth in the number of ultra high net worth individuals from now to 2025. So it's more than doubling in half the period. Right? Legal drinking age to 30 years, the youngest large economy in the world, adding 100 million potential new drinkers in the next 5 years. With a median age of 28 years, India is the youngest country in the top 10 economies in the world. Similarly, women, right? Similar to many countries in the Western world, India too is seeing women emerging as a key driver of societal change, building a more inclusive consumption narrative. This is not only about women as a target audience, but also a cultural transformation with a traditionally highly stratified society becoming more equal and inclusive. And then the boom towns. Growth has fast-tracked economic development across India, leading to higher consumption and purchasing power beyond the mega cities into smaller cities. I mean, if you look at an Agra, a Nagpur, a Vijayawada, industry reports predict that by 2025, Tier 2 and 3 towns will account for 45% of India's domestic consumption and 30% of its affluent households.
Q2 poll. NTPC as well slated to come out with its numbers. So let me quickly take it across to Vivek, find out what our poll is penciling in.
Will be delivering its results, and when you're looking at these results, it will come in the context of a lot of volatility as far as power companies are concerned. Power companies have been re-rated by the market. Power prices have been on an upswing. However, there have been worries, given the fact that demand has been quite robust as the economy unlocks. There have been worries that power supply is under threat, given the fact that coal inventories across many power stations are said to be at critical and supercritical levels. In fact, in some cases, a couple of weeks ago, we actually saw stocks of coal at around just 4 days as far as the entire power supply situation was concerned. Now, when you're looking at these results, expected to be a stable operational performance. Revenues are seen high by close to 7.5%, coming in close to the 26,000 crore mark. EBITDA is seen at around 8,150 crore, margins around 30.7%. Profits are seen flat around the 3,500 crore mark. Most important thing is under recoveries in this particular quarter are expected to be contained. Coal availability concern, and this is something that we would be waiting for as to what exactly the management says on this front. Expect plant availability factors, expect much higher PLFs. PLFs could be threatened by non-availability of coal, but it does not appear that there were any stoppages due to this particular factor. There was constant review being undertaken very promptly and very significantly across most of the power companies to ensure that there was not too much of a disruption, especially when it came to coal supply to power stations. In fact, Coal India was asked not to go ahead and supply coal to non-critical sectors other than power for a brief period of time.
Okay, Vivek, we'll leave it at that. And since we were just talking about the reopen trade with Dipan, just want to throw focus on what's happening with airfares actually. And it's quite a pleasant surprise when everything is actually going up and inflation is really dangling like a blue sword on your head. You've got airfares which are actually coming down. Top destinations, in fact, have seen a significant jump up in airfares in the last 2 months. But fares now seem to be stabilizing. The key reason behind this, of course, is that flight capacities as well are going up even as fare caps actually remain. Kritika Arora, my colleague, joins in with more details on the same.
So for perspective, if we see airfares during August and September had shot up over 30 to 50% for popular destinations like Goa, Jaipur, Leh Ladakh, as people were traveling during long weekends of Ganesha Chaturthi and Janmashtami. Even according to reports, the round ticket for London was as high as 1 lakh rupees. But now, if we look at the airfares over online travel platforms, we can see that these prices are now stabilizing. The demand is still there, but even for the upcoming holiday season, we can see that the airfares are pretty low. For example, if we check Bombay to Goa, the flight during Diwali is costing one-way ticket. It's costing around 4,000 rupees, while during Christmas and New Year it's costing around 3,000 rupees. If one has to go to Pondicherry, Bombay and Chennai flight is costing around 1,800 rupees during that time. So experts say that this is because the supply has improved. Flights are now allowed to run at full capacities. More and more routes are opening up, even international routes are opening up, and people are traveling internationally, which is why this kind of demand is being met with the supply. So they say, Eve My Trip says that they see this kind of trend continuing if flights would be allowed to run at full capacities and with more destinations, more routes opening up.
Right. Okay. That's the word coming in on airfares now with flight capacity is actually opening up with the cap remaining. Seems that airfares are going to come down, and that's quite a respite given that this is peak travel season in any case. Okay, that said, we're closing in sub the 17,900 mark, 17,869, a vicious cut of about 350 points. Only 21 F&O stocks remaining as gators. IRCTC, Metropolis, Ambuja Cement, IndusInd Bank, TVS Motors, L&T, Asian Paints has seen a bit of a rebound, Ultratech Cement, Shree Cement, and Maruti has flattened out along with Bajaj Finance and Bajaj Finserv. But Dipan, just wanted to understand whether or not you've been a buyer anywhere in the current decline which has taken place in the market, or for that matter, added to any of your existing positions.
Strategy, we never do major trades during an earnings season. There's a lot of intraday stock volatility, and we just like to get the earnings season over and done with. There are usually many surprises and disappointments which we realize later on. So it's best to just be in a wait and watch mode while the earnings season plays out, unless something disastrous is coming out which merits immediate action. By and large, we remain pretty much in no trade zone and look for good ideas which one can buy when the dust kind of settled down and stock prices have reacted to what their earnings and management has to speak. So for the time being, not participating in this correction at all. As I said that, you can expect a 10-15% correction at any point of time by this end of this year or early next year. It could be this moment where the stocks drift further lower from these levels. And then maybe I think a good entry point, especially for investors who are sitting on cash.
Indeed. Okay, and that's that right now. But Dipan, would you say IT perhaps largely would a safe haven, or given the kind of exuberance that one saw in the mid-cap IT space, I don't know whether legit or not, but with the kind of moves that you saw, for instance, on a Coforge or on an LTI, LTTS especially, the L&T IT arms, would you say with IT as well you'd like to tread with caution because the valuations are getting expensive even here?
These are multi-year secular growth stories for the time being, and you would see compounding of earnings for next 3 to 4 years easily. So something which appears to be expensive on a trailing 12-month or current year earnings may appear to be quite cheap if you look at 2-3 years down the line. But as I said, I think there's a bit of overvaluation. I would say more than that, the risk-return profile is not favoring mid-cap IT also at this point of time. Maybe you could have a 10-15% correction, and that may be a good entry point as far as mid-cap IT is concerned. But large-cap IT, I think, could be a bit of a safe haven if you see a further correction. The likes of Infosys, HCL Tech, and Tech Mahindra. I thought all three numbers were quite impressive if you dig deeper into it. And there's of course scope for at least Tech Mahindra and HCL Tech for their P's to be re-rated on the higher side, given better growth momentum and earnings visibility.
Dipan, now that most of the large private banking names out with their earnings, SBI, of course, the largest PSU bank still remaining. I think the numbers are slated next week on November 3rd. But that said, what is it that you've made of the performance? And it's clearly, seeming like it's the corporate banks which are winning the race. And clearly ICICI Bank seems to be leading here.
Yeah, that's right. I think stunning results from ICICI Bank. I thought IndusInd Bank also came up with a very good set of numbers. Bit disappointed with Kotak Bank, and HDFC I think came also with a steady set of numbers. So I think that the likes of HDFC, ICICI, IndusInd, maybe even Kotak, and overall I think the Bank Nifty will take leadership position over the next 2-3 quarters or so. It's a complete blue sky scenario for the banking sector. They're over and done with all the credit costs related to the pandemic and the IL&FS crisis which was there. And now with the economy opening up, this particular festival season will be the best ever for the country, and that will certainly create a huge demand for credit. All the large credit consuming sectors, be it real estate, infrastructure, capital goods, expansion of capacity, they're all revving up pretty well. So you should see good demand for credit. And so on one hand, you will have net interest income going up, fee-based income going up, and costs will remain controlled because overall credit costs, the largest cost component, will actually be declining for most of the banking companies.
Right. Dipan, we'll let you go on that note. Thanks as always for taking the time out and speaking with us today. Winding down trade, it's a 2% fall that you're seeing. 364 points gone for the index. 17,850 is where we're roughly closing around. And a dismal market breadth as well, with just 164 names standing to the advances right now. Kunal, would you say that, after ICICI Bank's earnings especially, there is a clear leadership change within banks? In any case, when about a quarter or so back, banks began to participate in the run-up in the markets, you did have ICICI Bank and SBI any which way take leadership. Has the pecking order in any which way changed? And are banks really now at the focal point for the markets to stabilize from here?
So I think yes, to answer your question in short, that yes, the banking index is now the focal point of the market observation, and that's I think because of the inherent quality of the banking index, where a lot of traders, they generally find a lot of these low digit stocks, PSU banking names, private sector bank stocks like Federal Bank, etc. These are the few names which generally gets cherished by short term traders, and these are the pockets of stocks as well, which tend to move in a very cohesive kind of a manner whenever there is a breakout. Now let's go back over the last couple of months, and the breakout actually for the banking index started off when the banking index broke past about the 36,500 mark. This was I think in the month of August end and September start, where the banking index managed to break past about that. Now initially it was not the ICICI Bank which led the charge from the front or led the breakout. It was actually the likes of Kotak Bank and HDFC Bank which managed to show signs of strength. But it's just that in the last 10 days or just prior to the results for ICICI Bank is where we saw pickup coming out from ICICI Bank, the stock giving you that relative strength as compared to its other peers on the large cap side. So there was this advantage which was getting very, very visible for ICICI Bank, and post results you saw the stock breaking past about those strong psychological marks of 800, 850 plus as well. Now what's actually happening for these stocks from the private sector banks, specifically for ICICI Bank, is a retracement for these stocks, trying to fill up the gap which was created just on the result day or post results day price action. Now, and these are natural processes which happens into the stock prices after an initial bout of rally. We've seen typically cool off, where the cool off tends to get absorbed closer to the gap filling process, and whenever that happens, you see the stocks coming back into the thick of limelight. So I think if that's going to be the case, ICICI Bank can probably stabilize closer to 770, 765 mark as well, which is where the initial gap actually started off for the stock. I think so would be the case with the other names like SBI as well. I think the stock has some good support closer to 475, 480 mark as well. So I would be looking to chip into these names, not at current levels. Maybe if these stocks drift another 5% from current zone, that could bring up a good opportunity to buy.
Right. Okay, counting down to the close, and it's surely been a rough one today. 17,850 is where we're shutting shop. Tata Chemicals has lost 11%. Adani Enterprises another 11%. PNB has lost 11% in trade. Adani Ports down 8%. Deepak Nitrite as well, about a 7.5% downtick coming in there. And I'm just going to dig up some more losers there. The list doesn't end there. Lupin, disappointing earnings from them, 6.5% lower. ITC has knocked down about 6%. IDFC First is closing in with a 6% loss. Idea down 6%. Vedanta down 5.25%. Indiabulls Housing down 5%. HPCL down 5%. BOB down 4%. ONGC, Godrej Properties, NAM India, Jindal Steel, DLF 4.25% lower. Oberoi Realty, big boys like ICICI Bank have lost about 4% in trade today. Kotak Bank has lost about 4% again. Hindustan Aeronautics, PFC, Coal India, Axis Bank, SBI, PVR down 4.25%, RBL Bank, Sun TV, Titan. I can go on really with the list of losers today. On the flip side though, IRCTC after its stock split announcement, 11.5% higher. TVS Motors, Metropolis, Ambuja Cement, Dalmia Bharat, IndusInd Bank, Astral, LLT, SEC, Ultratech Cement, these have been some of the movers. And yes, United Spirits after that blockbuster set of earnings has managed to close with a 1% gain. But Naresh, quite a bit of tumble, not just Monday's lows, but it's a fresh low indeed in the near term. Sub the 17,900 mark is where we're shutting shop. What is it telling you about the days to come?
So next, we keep watching out for the test of the 50 DMA as well as the previous major supports around 17,400, 500. So it's still a standard correction on the index. It was getting masked by the fact that Bank Nifty was doing well. So today, after Bank Nifty taking a knock, we've seen that correction happen. So the small cap and the mid cap indices had taken a 6 to 10% dive. So we are looking towards a 6 to 10% correction getting over even in the Nifty as well. So we'll watch out for say buying opportunities around 17,200 to 17,500 band going forward.
Okay, Naresh Kanal, both of you, good to have you in the show as always. We'll catch you again with all the market action tomorrow morning on the market right at 8 a.m. For now, we're going to wind it up on this edition of Closing Trades. Thanks very much for watching.